Sam, thanks for being with us today.
Thank you, Dave.
You've built a very unique and disruptive business model in the auto industry. At LMP Motors, one can buy, rent, sell, subscribe to a car online or in person. Give us an overview of this business model and what makes it unique in the industry.
Well, online is the way the world is going these days. And we're selling subscriptions. What a subscription is a flexible lease where a consumer can just choose a term, whether that be 6 months, month to month, 1 or 2 years at the moment. And what they get with that is to choose a vehicle, whether that's new or used, and it's competitive with leasing prices. But the beauty of it is you can basically return it at any time without a penalty. So you don't have the commitments of a lease. Over and above that, you can swap it for a different vehicle with 1 month notice, whether you want to drive an SUV that month or a sedan. You can swap the vehicle for a lesser cost vehicle or a higher cost vehicle by just paying the difference in the cost. So it's a very flexible lease product for the consumer, and we find the demand is just overwhelming.
Sam, you're a serial entrepreneur. You've been CEO of Fortune 1000 companies, Fortune 600 companies. What was the genesis of your idea for LMP Automotive?
Well, the genesis of the idea behind LMP Automotive was the e-commerce element of it. Automotive has not exploited the e-commerce space as did most industries. So it was very attractive from that concept, automotive being one of the largest, if not the largest, GDP in the United States. So it was just an unlimited opportunity to bring a product online that is not substantially online.
Sam, you've put together acquisitions that are expected to drive $2.2 billion in revenue in 2021 with net income of $4.59 per share, or about $40 million. Talk to us about some of these key acquisitions and how they could further accelerate your acquisition strategy.
So the capital stack is flexible and interesting. We believe we built the better mousetrap, as some analysts would have stated. What we're doing is we're buying fractional interests, a majority in all cases, of dealerships and dealership groups. So with an eye towards partnering with them. So you have installed management that has skin in the game. So you don't have a disruptive scenario. They continue to run their business. But from a capital stack and financing point of view, what you're in the last announcement that we made, Atlantic Automotive Group, the seller is retaining 30%, which makes it an easy transition. And from a capital financing point of view, what we do is at the operating company level is we get something of a traditional mortgage in the automotive world. It's called goodwill and working capital finance. That's typically 50%. It's productized amongst the banking world, as well as the factory in many cases will finance it to that effect. So that's 50% of the finance, and that's debt. That's attractively priced debt. The other, what's left is 20% because they're retaining a 30% interest. So you're only financing 20%. We intend to do that at Topco, not Opco, at the public company level, and that's why we went public, to have access to the capital markets. We intend to do the other 20%, both either or a combination of corporate debt or an equity issuance. or a combination thereof. So we are trying to preserve and grow shareholder value. So we're going to be opportunistic. Debt is obviously cheaper than equity in today's world. So we may do it 100% equity, or we may do a combination of debt equity, depending on where the markets are.
Sam, you talked about analysts saying you've built a better mousetrap. What's interesting to me is industry-wide, auto sales were down about 30% in the second quarter, better in the third quarter. However, your sales in the second quarter were up 40% quarter over quarter and 70% quarter over quarter in the third quarter. Why is this business COVID immune?
Well, one, it's the online-centric model. Two, it's the product competes with leasing, which is a majority of vehicle purchases. So the offering between online sales and online subscriptions is just so attractive for the consumer that the issue really is supply, not demand.
Sam, how does LMP differ from Carvana? I will note that Carvana has about $4.2 billion in revenue, is trading about 8 times trailing revenue. But what sets you apart from Carvana? What makes you different?
Well, the difference is we have a very focused strategic approach. We believe buying is cheaper than building, especially given the multiples we mentioned. It would actually cost you more to build than buy. That's one element. The other element is the clustered approach, where we're buying dealerships that are clustered in certain regions. You derive many efficiencies that way. Management redundancy, logistical efficiencies, which is very important. In the most recent, the LMP Automotive deal, they're all on Long Island. They have 7,000 vehicle storage capacity. They have their own fleet of trucking, logistics. So you do need storage and logistics, because what you're not hearing is that cost broken out. You're also not hearing the multiple legs of logistics that it takes to purchase a vehicle, bring it to the reconditioning center, bring it to your fulfillment center, and then get it to the consumer. That's 4 legs of transport. It's very material. In this context, it reduces that materially, and it also reduces the reconditioning costs, because franchise dealerships are where customers typically go to recondition their car. So it's the natural place to do it. You're also getting the parts at OEM cost. So you have a cost efficiency there as well. So you're able to flow the vehicles. The logistics is materially cheaper. You're actually cutting out 2 legs of logistics. And we all know that Amazon, when they first started, it was always the logistics. How do I ship a $50 item when it costs me $10 to ship it? It's as material, if not more, in the automotive world. So we believe our hybrid model is head and shoulders above the so-called pure play model.
Again, I want to note that you are projecting on that $2.2 billion in revenue, you are projecting about $40 million in net income and really double-digit top in line bottom growth, which is actually unheard of in this industry. Is that correct?
That is correct, and we're very excited about that.
By 2025, vehicle subscription programs will account for 1/10 of all new vehicle sales in Europe and the U.S. It's a $100 billion market estimated by 2025. In the U.S., what percentage of this market can you capture?
Well, we believe we're the market leader at the moment. We're the pioneer at the moment. We built the better mousetrap, doing it profitably as well. So we believe with the momentum we have and the momentum that we anticipate having, that we will hands down be the market leader and whatever that market share brings. This is a very large industry. It's 20+% of the nation's GDP, automotive. So we don't have to get a lot to be a lot as far as percentages, but we believe we're going to lead the way because we're just on the forefront of it.
Okay. What milestones can investors expect over the next 6 to 9 months?
Well, it should be a very exciting 6 to 9 months for us. First milestone is financing the acquisitions. We're very optimistic about that. We have gotten great cooperation from factories to banks, and everybody is for the deal and excited. We're receiving inquiries and proposals for financing literally every day, and we believe we're going to select one shortly, within a week or so. So financing is the biggest milestone. We believe that when we lock that down and announce it, that we'll have that will be a catalyst. The second milestone is obviously closing, and that'll get rid of the arbitrage discount to close. That'll be the second milestone. The third milestone is the most exciting, is when we prove that we could put 9,000 vehicles on our online superstore as well as our handheld applications. With that said, I think that makes us one of the top 3 online-centric automotive companies in the country. But better than that, we're all about performance. We're all about executing. We believe that will drive sales to levels that it'll be harder to fulfill than actually having the leads and the lead conversions, given our test markets, given the competition, and what they have proven. So that, I believe, will be the largest catalyst, is when we put it all online. And we intend to do that immediately or shortly thereafter closing. We're staging our back-end systems to quickly deploy that. We believe we've built the most intelligent back-end architecture in the industry as far as technology for quick deployment of applications and web and inventory integrations, as well as fintech, where we're going to integrate the F&I function and other credit approval functions. If you noticed in our previous press clips, we've hit every target in our goals on time. Very important to us.
That's right. I want to note also about only 10 million shares outstanding, 41% inside ownership, and you've been a big buyer of the stock in the open market. In closing, Sam, what's the essential value proposition today for investors? Earlier, you and I had a discussion, and we talked about the fact that with $2.2 billion revenue, the $40 million net income that you've put together through these acquisitions, you will become, or should become, a Fortune 1000 company. A few sentences, what's the essential value proposition?
The essential value proposition is we're in an early stage. We intend on being one of the most aggressive companies in the space and history proves that in other companies I've built. And we don't believe that the market is reflecting the catalysts that we've mentioned in our stock price. So I think the best is yet to come, and proven by the fact that I'm a buyer of the stock in most insider windows. I'm an investor. I am aligned with all other investors. Why? It's the best value proposition I've seen in my career, and I've built very significant companies in the past.
Well, I have to say, Sam, I've represented probably 800 companies in my career. I've got to say this is in the top 1/10 of 1%. Great being with you today. Thank you so much.
And thank you for that. That's a great compliment, and thank you for having us.